Hello, everybody, and welcome to the Plus3 Futures and Commodities show. We are recording on Friday, the 28th, about an hour before the close. On this week's episode, we will review the key turning points we identified in June, as well as looking forward to what could be the key turning points in the coming month of July. As always, my name is Ben Maldonado, and I'm here with Barrie Hederachi. Barrie, how we doing?
Doing great, doing great.
Can you believe another month is in the books?
Man, that's what I
And
was just looking at. I cannot believe
half the
it.
year is done.
Yeah, yep. We're here.
And you know what? I'm fired up because it's going to be super exciting, man. This second half is going to be bonkers crazy exciting, and there's going to be a lot of opportunity. So
I agree. Yeah.
let's jump in and help people understand where the key spots are and the key timing is.
All right, let's take a look at that. We left off last week, and you guys, if you haven't seen, the show before, just go ahead and check the couple of previous two or three, and you can catch up on the storyline. We left last week with this 55.66 was, which was a level we identified 2 weeks prior or 3 weeks. Actually, it's the one we've had there for about a month, I think. And so the market, we came up to the price and we stalled out ever since. So this is kind of an important level, interesting timing. We ran up 45 days, that could be called as a 45-day run, which normally leads to some kind of end of that trend. Larger trends can get capped by a 45-day run. And here we had that. And on top of that, we have a pretty decent ABCD that's also finishing it up. So, and I hit some of the lines because it was looking too crowded. I had a bunch of
Right.
I normally have this horizontal lines counting out the times bars.
Yeah. Yep.
And I hid them because there was too many. And the reason then I wanted to bring some back, and we were always getting late. So I said, reveal everything, like show everything.
Right.
Go here and then I got these two vertical lines come in. I must have done that calculation some other time when I was looking at the chart, and I forgot, but it just happens to be now. That block is right there.
Nice.
Yeah. So I wish I remembered how I how I got to it, but regardless, it's here, right? And so that's something. Well, even without the lines, we have
We had the 45.
45. We have price, and we have geometry in there in the form of ABCD. So that's cooking. Now, the other thing that's happening is, so two things I do when, well, we all do that. If you're using Gann theory, you want to look at the last swing and you want to look at the bigger, larger leg. And if you take the larger leg, move my square here, we're coming up on 270. If we were to reach up there,
Yep.
we're coming up to 450 bars from the low, which would be 5 squares. So it's kind of a big deal. And that's on July 8th, 5th to 8th, with the weekend in there. So we're coming into a critical time period. Again, based on the 90, you can see how many critical times we got to off that low. Is a 90 here, 180, 270. We made low, 270 low. From 270, we ran up 180, but 450 from there. So you see, it is a cluster of time. We can't, these are the kind of times we don't want to ignore from a Gann perspective. And we want to see what happens. So if we take it from the October low, which I've been tracking the S&P from a lot of the weeks, we did come up to, that's where I got the 55.66. So
Yeah.
So we came up 180, and we're 180 in time coming up on the 8th.
There you go.
That's the whole package here. So I guess the question is, what do we do now? It's very quite simple, because if we're long as we're below 55.66 from now on, I would say till we get past 8 would be the safe bet. If we can stay below or somehow end up below 55.66 past July 8th, we could call for a pretty decent top high being in place. Okay. I said it here first. I'll have to live with it. What to do. But here it's really important, really, really interesting. Interesting point is, and if you guys follow cycles, we're 450 from the low in October. We're 180 coming from the October of
23. Yep.
And then coming off of April, we're up
45.
45. So everything is kind of lining up, and it's, I almost hate it when it's that perfect.
Mm-hmm.
So that's what we have. How do we trade that? Well, I told you 55.66 is the key. We want to make sure the prices are staying below that. If you want to take an aggressive stance, we want to look for some kind of, well, we have a lower high already as of today, right?
Yes, we
So
do.
long as this lower high is in place, we can look to trade to the short side, and we'll look at the prices, levels on the 30-minute to zoom in a little bit. But here, I really, if you notice, I don't have any levels in between, and I never did up into this block. And you can see what happened. I had 53.10, 53.78. You can see what happened. We came up, we bunched up here. We squared out, corrected, went back up, a little bit of false break action, corrected, came up to the next second line, 5200, got on top of 53.10 right there, and broke out at 53.78. And I didn't have anything, and it went straight to, you can see the bars, like 1, 2, 3 bars. We're at 55.66. So I'm afraid the downside is more or less the same. I really don't have any support levels other than the lows. Here is the quarter of the square, this quarter of the square. I'll show you that in a minute. Other than the low here, I really don't have anything. So I would expect, if we get some downside price action it'll be rapid. So looking at, so you can see the quarter level, hold on. So you can see the quarter level is right along the lows. And one of the markers we can look for is to see when price settles below that. And long as we're above that, it's possible that we do some type of a, consolidation or whatnot. And if somehow we manage to settle above 55.66, clearly we have more to go. It's another story. But for now, dealing with what we have, since we have all this time come in, and we do have a decent price level here, I think we can just deal with what's in front of us, and we'll work with this. Anything you want to add?
Just that lower high, and we're getting a reaction off of it now in the last hour here. So if we take out 51.10 or 55.10, that's gonna, I think, get the ball rolling, because then that will give us a lower low as well.
Right. Sounds good. Well, looking at, let's see what else we have. This is pretty much the same count. We have 630 bars, calendar days coming up. So we have the timing there. We looked at the Dow, really never made a new high. We have 3 lower highs is what we ended up the month with. So Dow's been sort of the quiet one. And I still think this looks like distribution of some sort. Yeah, it's a triangle. It's possible. I thought we could do, it's kind of ascendant triangle. So I thought we could do a false break and then drop out. But it's been holding fairly steady. And like we said, long as it's above the 90 here, let's say 38,200, it's definitely in good shape. You can see how that level 90-degree line has held all the way through. Well, and here's a historical 45-day run, and you can see what happened. Instead of having a very deep correction, this is a very shallow correction. And so when we get shallow corrections, we know the market is very strong. And I think we talked about it at the time, and finally we got above the 90, and you see what happens. We came back and retested the 90 and slowly started making higher lows and moved higher, moved up into the 40,000 level.
But look at the change of character after that 45, right? We were going up vertically into it, and then it just got sloppy.
Very sloppy, right? Yeah. Looks like
distribution, like you were saying.
Yeah, let's look at the weekly. So when it's very clean, we have price and time, and we looked at all the different cycles. It's looking at the weekly. We talked about this 90 weeks coming up, and that's from the 22 low. And 90 weeks are, something
big.
It's big and something to watch for. Yeah. And the beautiful thing here is we have, let me delete this ABCD. What happens is we have 90 weeks going up, and on this last leg, we have that ABCD setting up, right? So it's kind of a, geometry wise, it's a beautiful kind of run coming into this. And the run has all the right parts, how the vertical just kept accelerating, and we're basically straight up going into that, and an inside week. Yeah. So we have an inside bar. And so here's the big takeaway on the weekly chart is if the weekly low gets taken out, well, watch out.
Watch
So,
out. Yep.
or the weekly high, but being that we're so close to the low, let's just work with that for now.
Hmm.
Yeah, if the low gets taken out next week, really watch out because we do have a whole bunch of cycles in place, and the 90 might 90. If you play by the book, and you guys know I look at two things. One is you can look at the low, you can look at the higher low that came into it. If you put it there, 90 weeks already clicked in,
Perfect. Yep.
right? It's perfect. That was the high. That was last week's high. And so we're watching that, right? We put a pin on that one. And then we have, if you go to low,
The low. Yep.
the low, we're next week. So anyway, the truth is somewhere between here and there, which is right now. So watch for those levels. I mean, the levels are the only way to really confirm these things. It's hard to mark time other than with price action. So levels really help us stay focused. And here we've looked at the long-term picture and everything, but now we're down into really watching to see what happens next week, especially if the low of this week gets taken out. I think that's really kind of the big deal.
It is
And
a big deal.
yeah, I think, yeah, because everybody's sort of settled into this sort of a happy medium, falling asleep and thinking everything's just going to stay the same.
Yeah. Hey, can you go back to your Dow chart for a second? I wanted to emphasize something that we had talked about last week.
Mm-hmm.
Remember, we were talking about how, like, or maybe it wasn't last week, but a few weeks ago, when we said the cycle ends, it doesn't necessarily just do a 180 in reverse.
Mm-hmm.
And there, your 45 is a perfect example right there. We were going up into it, and then look how the character changed. Now people get frustrated and they said, well, why didn't it go down? It should have gone down if the cycle was good. You made a high, you should be turning down and making a low. This is where you have to watch the price action and say, okay, what's the difference? What changed?
Mm-hmm.
Well, the price action completely changed. You were going basically straight up for 45 days, and then you've gone sideways and then drifted up and struggled to get, you couldn't even make basically a half square progress
Mm-hmm.
after that. And so that's an example of a cycle hitting, and what the reaction is not what you would hope to be, or what a lot of people expect when a cycle hits, is that, oh, we immediately reverse and scream like a bat out of hell in the opposite direction. It's nice when it happens that way, but it doesn't always happen that way. And this is an example of what you can get sometimes.
That good brings up a good point. And the point is our expectations. What makes
Yep.
us, like, how can we call that out? Like, what do we know to
Right.
expect a huge 50% correction? We don't know that. That's why we're trading, and that's why there's risk involved. What we do know is we know these potentials, right? So a square out is a potential. And if you really know the market, if you really study the market or a stock or a commodity, you can get very good at knowing when those cycles that are really linked to that particular market, how they fire
Hmm.
off,
Hmm.
and then you can get better estimates. So anyway, moving on to here, that's a very good example. And also you want to look at the divisions of the move. So here we basically held within an eighth of the square, the correction.
Hmm.
And to me, it's very, very strong.
Yep.
Now, if it got down to 3/8, okay, fine. That could have been a normal, very bullish correction, 50%, the normal bear market correction.
Yep.
So all of these things are in place, but the eighth is definitely very, very bullish.
Hmm.
And you can see here when we came in for a flush, it also held exactly at the eighth line.
Held at the eighth. Yeah.
Beautiful stuff. All right, getting back into the daily, I guess the thing to clear up here is that what happened in June was we were really still tracking this coming into early part of June. We were still tracking this high, and
Hmm.
we were looking to see if this cluster here gave us a false break. And it did in terms of as far as the false break goes, because it didn't continue to go higher. But the correction was very shallow and it was halted exactly at our support level. So we backed off at that point. And when it came around again and got settled, this cluster, how we settled above 53.10, that's the signal to tell us that market's definitely going higher, right? It's very strong. And the key is how, I mean, this is where the market structure comes in and the pattern. So you can see how 53.10, how we settled about 53.10. From there on, it was up all the way. And that's when we popped above that, got right to 55.66. So that's in terms of reviewing. I mean, that was a big thing, was being patient in the early part, waiting for that to set up, and there's move. And after that, of course, we had to back off. We got a whole week of, stuff that we have to chop. Speaking of that, speaking of which, let's take a look at the week, 30-minute.
So there's your chop.
Yeah, this is how we spent the week. And we identified that right away early on, I think, looking at 55.39 to be sort of the main reversion point. And that often happens at main square points. And this is 270 up from that low. And we spent it the whole entire time in the bracket, not much to do other than you could have bought the dips. And the beautiful thing this morning was we ramped up and hit it 55.83 on the mark, within one of our lines, and sold off. So it wasn't like it came out of nowhere. We knew exactly where these things could begin at the resistant levels, right? And so we were looking for it to be an expanding triangle sort of a pattern, and we were trying to track that. And it looks like we got the upper end of this, and now if we can get down to 55.15 or even lower, that would fulfill that, and we'll have to deal with what happens next. But I put my note this week was to really watch 55.15, because if that goes, then we open up a whole nother can of worms. So we have to really watch that. It's not so much 55.39 at this point, because that's, as we can see, that's more of a reversion point.
Yeah, your 55.15 is right in the neighborhood of that 55.10 I was talking about.
That's right. That's right.
Right there.
Mm-hmm. So we got to watch that. And you can see we do have some price action that mapped out perfectly around that.
Mm-hmm.
So that's the 30-minute. And these are the levels to watch. So 55.15 for you guys, if you really want a trigger level for next week, that, I didn't have on the daily chart. I would watch 55.15. We have 54.95, 54.73. These are all quarter levels of the 30-minute. But the key levels being 55.15 here, because if that goes, knowing what happened at the highs and how this high came in, 55.15 becomes a key level for next week. Again, if we happen to, somehow we manage to get on top of 55.39, now we're back into the consolidation part, until we can hold about 55.62, which would be this level, the zone up here. So we'll see. With given all the timing cycles that expired, we really want to watch it now, because you can catch a nice draft just like we did this morning. We can catch a nice draft on the higher time frames. So I think it's something to watch.
For sure.
For sure. Yeah. Right. And that's it for the ES. Let me move on to the bonds.
And bonds made a move today.
A little bit of fake price action, mind you.
Yeah.
So last week we talked about 1916 being, well, that's our level, and how price was holding above it, and it was putting in a bit of a triangle this week. So it was really at that point, which way is it going to break? Looks like we broke down, came back for a retest.
Tested.
Yeah, test down. So now we're back. I mean, long as obviously 1916 holds, looks like the next level is 1616. So that would be 50% of the square. If it's still working off of this low, and I feel like it is, and if it is, then 50% still matters. Let's see what it does here. We're going to treat that as support, and we'll take it from there. Anything you want to add to that?
No, just that this move, I think, is breaking us out of the sideways we've been in for a while.
Now I was going to say, we talked about this potential breakout of this triangle. And boy, talk about a false break. I mean, that would be about a false, right?
Yep.
And especially it's something we talk about all the time. We took out last week's low.
Yep.
In an outside reversal, right? So that's something to watch. So it looks like we're heading back down to potentially 114.
Yeah.
So I would watch the levels. Now you guys know what the prices are, and bonds are behaving as now we're back on track again after a little bit of a sideshow.
Choppy fest.
The other thing is didn't quite get up to the ABCD, which tells you
shows weakness.
Yep. So let's stay with that. Crude did exactly what we were looking for, which was to go up and tap the 83 level. We had the zone drawn up here. We went up and tapped it today. Tried yesterday. Today we tapped it and we reversed. So, the basic theory here is as long as we're below 83, we're probably not going to get to $100 a barrel yet.
Right,
But
right.
soon as we settle above that, we can expect much higher prices this time around. It's probably going to go up and test the highs we had last September.
Mm-hmm.
But long as we're in here, the next thing we're looking for is to see if we know where the pullback low comes in. If we can hold about 77 or so above all these consolidations, I think it'll be very positive to move higher following the correction or pullback or consolidation after reaching 83. So that's what we're looking for. Worst case, we're just going to range in here between 73 and 83. That's possible. So I'll just leave it at that. You want to add anything to that?
I'm going to show a couple things on crude,
Okay,
in the
great.
commodity segment.
Okay, great. So looking at the crude weekly, this is the box we were watching. We've had it on for a while. 50% of the range happens to be right around 81.50, and we're closing 81.33. So we're right there. And we really want to, we can't have the bar sitting 50-50. So once we settle on one side or the other, I think we can call out the rest. But we've been up for 3 weeks, and that's quite a run. And if we continue next week, we might have something stronger on our hands. But it's too early to call it. We're right in the middle now. We called it from the bottom, 73 to the 83 level. Now we have to pause to see how we settle at the 50% going forward, right?
Yes.
Gold. What do you think?
Sideways continues, but it's bullish. Look at we were talking about mild pullbacks and shallow pullbacks. There's a perfect example of one. Basically, just only pulling back a quarter.
Yeah, and especially with gold with the 100. I'm calling this. I think I'm going to go with 144 by 144 here, as far as the square goes.
That's good. Yeah.
Let's just say it was off a little bit.
Right.
If that's
call it central bank manipulations.
Yeah, there we go. Big time. If that's the case, and this is sort of the reaction we're getting, gold is very bullish, right? It's intensely bullish. So let's stay with that. And the one level to watch would be these lows. The 1/3 of the square ends up being about 23.07. So watch that level. As long as we're above that, it's in this. It'll continue to be in this positive sort of consolidation. And of course, getting down to 22.60 wouldn't be some kind of a disaster. It'll probably be just a flush for these people down here. But it's okay. It's looking good, considering the square that it had. It's a very mild sort of a correction consolidation. So,
and I think your advice on they might go for those lows over there is good advice. Just go back and look at the gold chart, and before big moves, it always does almost always does a clean out move.
Yes. Yep. Definitely. So let's see. And we do have a good strong angle, on the lower highs. You can see that. The triangle, I'm sure every trader is watching. That's a triangle right there.
Yeah, it is.
Triangle. So let's see how that plays out. Not much for now. Let's move on to get back into copper. Well, let's look at the weekly. How about that?
Yeah, you can look at the weekly. The thing to notice, just for everybody's edification, is we had a really strong move, and then you look at we squared out. What happens here? We got a very bullish consolidation. That's one of the things, right? And whereas when you get to copper, we'll see a different resolution after a square out.
Right. Yeah. And the other thing to watch, you guys, is we're coming up into 90 weeks from the low last November. Okay. And that's coming right up in July. So we talked about what to expect for July. We have a lot of these 90s coming up. We have the 90 in the S&P, and we have a 90 in gold. And so it's possible we hang around here. If you notice, we touched the trend line this week. The low here came in exactly on this trend line we had drawn out. Prior to the low, you guys look at last week's chart, the line was already there, and you can see how we touched it and rallied off of it. So it's possible that we run up into the 90-week cycle, where we also have a very close 45, right, from here. So we have 45 from here, 90 from here. So it's something to watch. Let's see how it plays out. But I think the bigger move is in the works, right? It's still in the oven.
Yes.
Let's look at copper.
Speaking of how
Mm-hmm.
something, look at how that square ended and
Yeah.
what happened.
Mm-hmm. So it looks really good so far. We were, once we lost the 50% of the square, we were looking at the quarter, the 3/8 level. And I remember last week talking about the potential, we have structural
Mm-hmm.
support here
Mm-hmm.
from January of 23. So we, came down fairly hard and landed for 3 days. We've been sitting on top of it. Let's see how that works out. Copper, a little bit like gold, likes to always go and poke the little guy before they move it.
Mm-hmm.
So it's possible we get down into the full square. That's around 408. It's possible, but for now, it's found support. Now let's see if the price action can sort of justify what's going to happen next.
I mean, but look at that. Look at the reaction off the square when you called the high a few weeks ago.
Mm-hmm.
I mean, it's a different character change than gold or than
Exactly.
you, but
Mm-hmm.
it's the same principle, right? Something ended. We just don't know what comes next. Here's a V, right, where we get a sharp sell off.
Mm-hmm.
Gold is basically chopping sideways and
Exactly.
consolidating.
Yeah. And you can see the bars were there. We had an inside bar here that, you could have, because of the square, you can always take an inside bar because it's a very low risk
Mm-hmm.
trade. And here's our first counter trend we always talk about. And you can see what happened as soon as the lower the counter trend high got taken out. Easy, low risk trades, right? All the way.
Mm-hmm.
And then we got into the 50%. We held it. And notice what happened once we got below that. We came up to test, sold off, came up to test, sold off. And we landed exactly on the support line we had. So technically, it's trading pretty well. Looks like copper's, there's some traders in there. So it's looking pretty liquid, looking good.
Mm-hmm.
And this is by the way, we're running a square of 60 on copper. So this correction was really a 30-day correction. So it's, by the book, everything's lining up perfectly.
Yeah,
So
it could be over because
it could be over. Yeah.
we're on decent support and we're kind of it stopped going down on this support for now.
Mm-hmm. Exactly. So I think noting that we did correct for 30 days, which is 50% of the square in time. Yeah. So let's see. And
let's see what kind of
and we
reaction
pretty
we
much
get.
did one square down, by the way. I didn't say that, but
yeah.
A lot of times I'm
quarter
thinking,
to quarter. Yeah.
Yeah. So sometimes I think, I'm kind of thinking you guys are seeing things, but because
That's good to point them out.
Point them out, right? Because on the screen it might be harder. So if you put the square at the high, we're pretty much down 60.
Yep.
So we could tap here. This is where that falls kind of a break could come in, but that 30 by 60,
it's nice.
Yeah, it's there.
Mm-hmm.
And since we're expecting it to go higher, we'll leave the square back where we found it.
Mm-hmm.
Getting back into the weeklies, let's look at here we did this 216 by 216 kind of.
Yeah, that was beautiful. Yeah.
Mm-hmm. And we saw a couple of weeks ago how this 216 cycle is fairly consistent in copper. In line with that, so this 422 seems like a good support level for the weekly to come and test. And so we'll see if that happens. Up until now, up until then, let's let it play out.
Yep.
All right, let's get on to the dollar.
The dollar's not dying yet.
Not dying, but it's definitely coiling.
Yep.
So we drew up this box, and we're expecting the 50% of the square to be resistance, as always.
It's banging on the ceiling right now.
Yep. 106.16, 3 days in a row. Can't do it. So I'm guessing we're going to consolidate, between 105 and this 106 level, 50% of the square, between this green line, which is 1/3 of the square. So between these areas, depending on how the structure looks, there could be a break to the upside, or it might be a little bit longer. So we'll watch it next week. It looks like it's ready to break it, but let's give it some time. We got the move we wanted. We wanted to see get to the 50%. these are the key levels we watch. So once we got to the 50, we'll have to, we have to pause and see how the price action looks. And what about the things we called this week, this month in June? We were looking for this support here based on that line. And so that got the low for the month, and there's a high for the month. So we basically called that entire range.
Mm-hmm.
Can't say we didn't, Ben.
No, it's good. It's very good bracketing.
Right. And going for the weekly dollar, I mean, this triangle is just amazing. I'm just waiting for it to break. And the interesting thing is we have coming into that July 8th week. Remember, this is weekly, right?
Mm-hmm.
We have 360 degrees going into that.
Wow.
Okay, that's degrees of the sun's movement. And that's another way, again, counter cycle. So we have 300 and 360 is a full cycle, eh?
Mm-hmm.
So it's possible we go in there and, sometimes these cycles are place of acceleration. We could break to the upside. On the other hand, it could be a reversal. So we'll see how it works out. But the key thing to remember is we're also doing 90 from high to this, whatever happens here. If we make a high next week, so high to high, we could have a 90-week move.
Yeah.
And so that's something to watch.
There's those 90s again.
A lot of 90s. That's what I meant. So, and all of these 90s are coming in July. And that's why Ben was talking about, all the action that's coming in July. So let's move on to the euro. So on the euro, not much. We basically held the same line, 3/8 down from 144. Still on the weak side, but not much to the downside. We did make a lower low for the week though.
And it's kind of looking like it's rolling over, doesn't it?
It sure does. It does. I mean, this whole consolidation, it's a consolidation, but you can see we're also making lower highs coming in, lower lows. So it's, this is the decisive next low. Are we going to go down and make a lower low or not? Right.
Mm-hmm.
So we'll see. Dollar's pushed up against ready to break out or not. And here we're also pushed down and we're ready to move. So that'll be for next week. See how we move out of here.
Right.
But the general direction and the strength is really weak below 108. We talked about that until we get to some decent support. So here, really the decent support is 50% of the square. And that's at about 106. Anything you want to add to that?
No, that's a good summary. It's hanging on by its fingernails.
Sure. Speaking of fingernails, look at the bottom of it.
Yeah. Yep.
So that's really what's happening. We're in this triangle. We're contracting and contracting. I don't know how much longer, but if you break the low, it's very possible we start to trade lower. And if we start to do that, begin to do that, we're definitely going to check this low and probably get down to the 50% level.
Mm-hmm.
Weekly square, which is around 104. Okay, 104.1.
Sure.
That's really it. And we're below the 108 level, which is kind of the center of the triangle.
Mm-hmm.
And not much to add other than if we can do that, we're very, very tight into a 90 low to low, 90 weeks low to low.
Yeah.
And
another 90.
Another 90. A lot of 90s lining up. We'll see. Not that 90s always work, but certainly, we have something happening here. So
it's a call to pay attention.
Yes, for sure. And especially we're wound up in this little triangle.
Mm-hmm.
Not little, actually, kind of huge triangle. So we'll see how that works out. For now, just remember the lows.
Yes.
Mm-hmm.
Gas is still correcting. See that little ABCD it's doing? I think that's what it's trying to do.
Yeah, and it was interesting. It went back to exactly the quarter line to test it this week, early part of the week, and couldn't do it. Started correcting. So that's happening. Hang Seng.
It's hanging.
It's hanging all right. That's a great way to put it. And 1854 was the level we were going to watch. If it was above that, we were going to look at this to be a strong market.
Mm-hmm.
And if we lost that, the next level it's really back down to the 50% of the square, which ends up being around 1750. So it looks like we're going to, mosey on down to 1750. There's a potential ABCD, a couple of them setting up. There's one off of here, one off of here.
Mm-hmm.
But kind of like the 108 in the euro. We're looking at this 1854 to be sort of the balance point, and looking for weaker conditions below that until we get to support. So we talked about that. That's all I got. Let me put it back to you.
Okay, very, very good.
Thank you.
You can see based on the numbers Barrie was the counts that Barrie was sharing on the cycles, we're coming into an important time.
Yep.
And that means, like we said, pay attention.
Yeah, really pay attention. A lot of price action. And usually coming into these kind of corners, volatility just increases, and we have to really be ready for that. And look what we had this week: triangles and corners and squares and more triangles. And all of them, normally point towards some kind of a break. So let me put it back to you then. Well, we're still in the same area. We exceeded the channel. And I would say it's a nice setup.
Nice lower high, right?
Nice lower high, beautiful.
And today we're closing. We're after the close now. Closing on the lows, right near the lows. So
yeah, S&P too.
It looks a little heavy.
Yeah.
Anyway, so let's quickly review key levels. We were talking about this half square, which is a little over 20,000, 20,085, that we wanted to see, a close over that and a clear of that to open up the next square up here, the full square around 20,800. All week we were messing around with it. We had one little bar on the 18th that was above it. Everything else has been either under or on both sides. So we're struggling at this level. Would not be surprised to see a pullback to this full square here, which would get us back to about 19,350. If we don't hold there, then this is where the big support is, because you can see there's structural support here, and we kind of built a little ledge here as well, and that would be the half square here, which is around 18,640. So we're struggling here. Wouldn't be surprised if we got back into this channel and corrected and came down to test this full square. And we just have to see how price acts, when we get there, whether or not it's going to open up this half square here. Timing wise, we did 44 to the high, which is essentially a 45, off of that April low. Since the last October low, 180 gets us to, guess when? First week of July 4th. So right in that time frame again, early July, would give us a 180. So we'll watch this. Both these levels are on the Google Doc spreadsheet, which we'll send a link to with the link to the show. Here are your two levels: the half square here and the full square here. And right now that's governing the price action there. Anything to add before we switch to the bigger views?
No, it looks good. That's what we have to watch. And we do have a lower high. Let's see if the lower low gets taken out.
Yeah,
or the low gets taken out. Yeah.
That'll be big. This lows get taken out. That'll be big. That'll get the ball rolling downhill. Here's something Barrie and I were messing around with, some circles last week, and this nice one came up for the weekly. The key thing is this week we spent like right on the edge of the circle. So next week we're going to be outside the circle, and let's see. Sometimes we get a collapse off of these things. Other times we could just go sideways. The key thing to watch here is this price level we've been struggling with for the last 2 weeks, and that's 20,100, which similar to the daily around that 20,085. So as long as we're below that, we should see some pressure. The support is going to be from this 18,665 down to the full square around 18,200. If we do come into this area, we can expect to find support here. If we hold here, then we can potentially get one more push higher.
But these 180 days too.
Yeah, 90 days is the week of July 7th.
Right.
90 weeks, sorry. 90 weeks from your the low last fall. So or sorry, that's in 22. The low in October of 22
Right.
takes us to the week of the 7th.
Mm-hmm.
So there's a lot going on here. We'll see what happens when we next week when we start trading, but we should be fully outside of the circle next week. We'll see what kind of reaction we get. Let's take a quick look at the monthly. The reason I want to show you the monthly is got some time counts in here that take us 22 months, takes us to August. 52 months is July. 101 months is July.
Mm-hmm.
And 270 takes us into May, but that could be, that's potentially like bear market lows over there if we actually correct. But
That's
these,
another story.
these
Yeah.
are big timings, right? Because these are months.
Yeah. Mm-hmm.
So they're significant. You can see technically though, we could pull all the way back to, roughly 18,800 and it's still bullish. And
Yeah.
even back to this half square and it would still be bullish.
Mm.
So maybe we get a sharp correction, shake people out a little bit and then push again. And price action will tell us which way we're going to go. So we watch that. The last one I want to show you because it's really clean is I did a calendar day for the
Mm-hmm.
NQs. I mean, look how nice that is.
Wow. That is nice.
You can see the lower highs clearly. We squared out, at the 288 up here. That's
Mm-hmm.
144 twice. We did 60 calendar days, low to high. These are some other counts that take us out further, if we go on into the summer.
And it
But
looks like the one by ones on there are just perfect.
yeah, it follows these nicely, doesn't it?
Mm-hmm.
Really does. So, I mean, again, we could pull back to the one by one and half the square here and have it be really still bullish.
Yep.
So anyway, I like that look when I saw it, so I wanted to show you. Anything else you want to add on any of these charts on the NQs?
Well, I mean, looking at this chart and the stuff we were looking at, everything got pushed into a price and time corner coming in next week. So we really have to pay attention. That's really the key.
It's definitely a marker.
Mm-hmm.
We're just not sure of what the reaction's going to be, which is why we watch price action and why we don't anticipate and why we kind of react once we see what price does once we get to there. Let's take a look at Bitcoin. Bitcoin continues to correct. Last week we talked about, well, since we're stuck below this half square, the full square is going to be the magnet. Well, look what happened.
There you go.
We not only pushed through for 3 days now, 4 days, we've been pushing up trying to see if we could get back above this 180, and we haven't. So either we're coming down to the bottom of this channel or we're coming down to the support area,
Mm-hmm.
that I identified earlier, which is the full square and then this structure here and this structure here.
Yeah.
So we'll see.
Mm-hmm.
It looks better on the bid right now, people selling. So until we get above the full square, which is 62,000 roughly.
Mm-hmm.
That's your key. We get above 62, the pressure's off. While we're under there, the pressure is down to this half square, which is around 56,200.
Okay.
Anything else to add? I mean, although remember, if you zoom out, I think I have a monthly up. Let's quickly look at the monthly.
Mm-hmm.
If you zoom out, look where this consolidation is taking place, man, right at the old highs. And remember what did that, Barrie, before it took off? Gold.
That's right. Yeah.
We had that 2-year triangle and sloppy
Mm-hmm.
trading, and then it exploded up. So bigger picture, this still looks, as long as we're above, this, what do we call this? 50, 53, 54,000 on a
Yeah. That's
monthly
a level,
basis.
right? That's the key level here.
That is key. And we're still pretty bullish. If we get stuck below it, that's trouble.
Yeah.
So just always zooming out always gives you that context that you don't get when you're zoomed in on 4 hours or 60 minutes or even dailies.
Mm-hmm.
So let's talk about the commodities. So the corrections and consolidations are continuing. The interesting thing to me is we saw some selling in the grains this week, some
Mhm.
pretty decent selling to where there's possible false break setups on corn and soybeans. Like I think corn actually made a new swing low. Beans didn't yet, but they're set up to where we want to watch next week to see if corn bounces back and turns higher. That could be a big tell, where we've had the clean out move and now the big move comes. And
Mhm.
if beans does make a new low and does a reversal, same thing there. So we want to watch those. Barrie reviewed gold and copper. Silver's similar. We've basically had a small consolidation and pullback. It's basically going sideways and chopping around, which after the move it had is very bullish longer term. So we're just waiting for that one to set up. Couple of the softs that we want to talk about today. I actually put out a post on X on this one when it broke the triangle because we had been waiting for that, and that's sugar. So
Yep.
sugar, we called out the low, 3 or 4 weeks ago on the show. We had a nice
Mhm.
push up, and then we started chopping around here. And I said, okay, guys, we're kind of in a triangle. Let's wait until we get this move, and then we can really jump on board because you can see we
Mhm.
were running into this resistance here. And so this week, triangle broke yesterday, had some follow through today. I think sugar looks like it wants to get up and go now.
Mhm.
This low was a decent square. We've had higher highs and higher lows. This taking out this high, which we did yesterday with that big candle, was
Mhm.
big. And now so we're looking at next resistance, and the magnet's going to be up around 21 and a quarter. Any pullbacks here that hold, this half square for sure. And if it can hold this eighth, we can look to buy because that sets up, another higher low type situation on the
Mhm.
daily. Let's take a look at the weekly. You can see what we did on the weekly here.
Yep.
Nice big up bar this week. We cleared the half, closed above the half square. Next week, we want to see if we can clear it, meaning that the low stays above, call it 1989. If it does, it'll be basically sitting on top of this structure and give us a nice little pullback
Mhm.
for continuing to move higher. We also did timing wise, Barry. We did 27 high to low,
Yeah,
which
that's
is
a good one for
that's
weekly.
a yep for weekly. That's basically half a year, right?
Yep. Yep.
So it's a nice 6 month pullback, high to low. So again, the weekly is supporting the daily. Now let's have a look at the monthly. What did we get here? On the monthly, we got our first up bar, right?
Perfect.
First
Yeah.
up
Looks
since the
good.
low came in, half square held. It's a good sign there. Next resistance is going to be up here near the full square. Let's say from 22 to 23 in that area.
Hmm.
But all this is supporting. You can see we had a low, we had a high, have a higher low. There's your clean out move, by the way, for
Yep.
everybody that wants to see how they do it on the commodities, right? Made a low, made a lower low, and then another lower low, and then it took off. And I don't know how many times they do. And look how it didn't even let you in. Month after month after month, it went up.
Mhm.
So anyway, the point is we've got the monthly reversal. We've got the weekly supporting, and we've got a nice breakout here on the daily. So I think sugar is ready to kick into gear.
Mhm.
Anything you want to add here on sugar?
Well, just looking at the monthly chart, we that support was exactly at a 50% level, and which
Yes.
is really the level you want to watch, and looks good. It looks good. I think we can start trading alongside
Yeah. Yeah. I think
again.
sugar's ready.
Yeah.
Yeah, we did talk about that in a previous week that if you look at the move from here to here, the pullback was exactly 50%
Mm.
because we went up two squares, but down one. Let's jump and look at coffee. Coffee's one that we've been talking about off and on, since this low came in last fall. And as you can see, coffee likes to triangulate.
Mm-hmm.
We had this push up. We held, pulled back. And again, here's another example of what Barrie was just talking about. Up two squares, down one, pull back one square. And now I think we're moving and ready to break out of this triangle to the upside. Could have a little more time, but I wanted to put this on the show because if we look at next week, 4 or 5 trading days is going to take us right out to here. So it's going to
Mm-hmm.
be getting pretty tight in that triangle.
Yeah.
So be aware the key level, not only breaks us out of the triangle, but will break us out of this square is around 237, 238.
Mm-hmm.
We get up and we exceed that. This could be a nice blast off for the next leg up here in coffee. Let's take a look at the weekly. Key level here for me on the weekly is we're holding this half square.
Mm-hmm.
And the half square here is around 220. By having another weekly close over that, we're sort of, you always talked about creating air between, previous highs and lows. And you can see this first pullback came back to here, but the next pullback is holding. So we're kind of triangulating. I didn't like the steepness of here of drawing this one in. So it's almost like what do they call it? A flat triangle with a flat bottom.
Mm-hmm.
But this thing, I like the fact that it's consolidating, well above this previous triangle, came down and tested this here, and then we shot right back up above this half square. So it's another example of sort of consolidating near a previous high. So we just got to be patient and wait for the next move here. The daily you can see is winding up, and once the daily breaks out, these things will move. Let's look at the monthly. What I wanted to show you here on the monthly, we've had 2 inside bars after a big up bar, 3 months ago,
Mm-hmm.
but we took out the high this month of the previous inside bar. So that's a clue that you like to use on the daily, but it also works on the higher time frames too, where the pressure could be to the upside. The other thing is we're holding this one by one. Look how we danced along this one by one for months and months and months.
Yeah.
And this could be we always talk about the angles. You want that angle when it's ready to go, and this could be the thing that gives it that speed and that momentum kicking
Mm-hmm.
in. So on the monthly basis, we want to clear this full square, and that's around 250. Clear that, sit on top of it, then we're in good shape to really move higher, and maybe 400. 300 would be the first stop, and then 350 up here would be the full square.
Mm-hmm.
And that's kind of what we're looking at in coffee. What else do you want to say about coffee? Coffee and sugar go good together, by the way.
Yes, they do. Well, I mean, the upside of the triangle is right up against your square. So if that
Mhm.
goes, we know there's a whole another leg left in it. So we have to just patiently wait for that.
And that's the idea. I know it's still in the triangle, but I wanted to
Mm.
I wanted to have people aware of it because of the formation being right under the full square. And as you add 1, 2, 3, 4, 5 days, look how far down the triangle you are.
Mm.
One way or another, we're going to break probably next week or the following week, one way or the other. So pay attention to coffee.
Yep.
And last one I wanted to look at, this is one that you covered, but I want to show you, and it's wild where we're closing. Now, daily doesn't look like much, right? It's slowly creeping up and slowly crawling, but
Oh, a $10 move. Yeah.
we're still getting these higher lows, right? So
Mm-hmm.
here was your low. Here's your clean out low, right? There's your false break. Get a move there. Another higher low.
Mm-hmm.
And now we've been sort of triangulating here for a while, but we just put in another higher low, in the beginning of June. And now we're sort of grinding higher. But let's look at the bigger time frames because here's where I think you could see some interesting things. So while we have a few more weeks, this thing could potentially go. We're starting to get into the tight part of this triangle. And this is a big triangle. It goes all the way back to a year ago, August of last year.
Yep. Yep.
So this is a lot of energy. And look where this is sitting on top of.
Mm-hmm.
All this price action pre-pandemic, right? And we're seeing in a lot of markets, you saw in Barry's review, and when I look through, there's a lot of these triangles building that are good. Something's coming that's going to release the energy. And when it does, the moves are going to be pretty spectacular. Um, let's look at the monthly, because the monthly is the thing I thought I was laughing when I looked to see where we're closing.
There
So
you go.
you could what we're doing here, and it's not quite done. I think futures actually close at 5, so another half an hour. Uh, we're working on an outside reversal up bar.
Mm-hmm.
Made a big low here, and we're closing near the high. The high last month was 81.57, and right now we're at 81.51.
Mm.
So we may not get the outside reversal, but what we know we're getting super, super close to a resolution of this triangle.
Yep. Yep.
And again, look left, look at where the triangle's formed, and look at this huge block of price action that it's basically sitting on top of.
Mm-hmm.
There's going to be a big move. When this triangle breaks, it's going to release a lot of energy. And I think if you just look at the length of it, you say, okay, it's a half square. Let's say we go a half square. It's over 100, 115
Yeah. Yeah.
without any sweat.
I think it's coming. I mean, look at the triangle. It has to break. It doesn't look like it's going to break to the downside. So,
It doesn't. And that's the whole point, is that these triangles are appearing, and it's in very different markets. It's in FX, it's uh in the commodities, the different types of commodities. We're seeing these triangles. So something is a decision is coming, and this energy will be released, and we'll get these big moves. It's up to us to be prepared and aware and ready to react when they do happen. And so I know you talked about crude, but is there anything else you want to add based on the things that I was pointing out here?
no, you pointed out all the important things. I think this big triangle is something we need to keep in mind because it's monthly, right? I mean, the move could go for a couple of years
Yeah.
if it got out of hand.
Yeah. I
Mm,
don't I mean look at this triangle here, Barry. This one. That
exactly.
that was a monthly, right?
Yep.
And it,
Yep.
it resolved to the downside. And let's say it broke out 2014, the low came in 2020.
Mm-hmm.
I mean, even if you take the first low, it's 2016, 2 years,
Yeah. Yeah.
a
No, it looks
2 year
good,
move.
and it looks like it's set up. I think the triangle is really, really important, and we'll see this in hindsight, how that works out. But we know it's gonna give us a big break.
And Barry, I've been mentioning these triangles. When you see like triangles like this starting to appear in markets that aren't connected in the past, what has that meant? Like, what is that when you see it? What does it say to you, and how do you prepare based on that?
Well, I mean, even intraday, and even in the shorter time frames, it just tells you there's a bigger. Obviously, the triangle has to resolve. It'll resolve to in some kind of a directional move. So it's really getting ready for that. And then you bring in a set of tools that'll help you sort of find the start of that, the beginning of that. That's how I look at them. Some are longer, and you never know exactly how it's going to resolve. They could break out before it gets to the very end. Some get to the very end and keep going sideways.
Mm-hmm.
So you want to watch them and study them and really track them and not fall asleep, 3/4 of the way through the triangle. And because there's a move coming, very high, 80, 90% probability there's a move coming. And you can
Mm-hmm.
usually get a measured move out of that. So we know here it's about a half square. So it could be half square times 1, 2, 3. That's the potential of the move.
Right.
And what is that half square? That's about how many dollars is that?
It's a 52 full square, so that's 26.
Okay. So that's a big, those are big numbers.
In crude, that's huge.
So yeah, I think what I always look at anytime, well, even a consolidation, but I think when a triangle shows up, it's really good. It's a good time to focus on that for the break and try to get in on the next leg. And then what matters there is, if the triangle is forming, is it after some kind of a square out? Is it below the square, above the square? Is it a pullback and triangle on top of 50%? You know what I mean? Then you have to place it within the structure, see how much weight.
Right, context.
Exactly.
The other thing I've noticed and I try to do too is look when I see the technical structures, I also look at where we are in the cycles, and we
Mhm.
have so much timing coming up and the triangles are appearing. It puts me on sort of heightened alert because these moves coming out of here could be massive
Mhm.
because you've got these big time counts, you've got these natural cycles, you've got all kinds of cycle hits combined with markets that are at an indecision or a decision point, if you will. They're in indecision, but they're coming to a decision point and building up a tremendous amount of energy.
Right.
I mean, historically, it's been a recipe for big moves.
Mhm.
I mean, do you take into account, like when you're looking at the structures, different structures in the market? Oh, do I have, smaller cycles hitting like 30s, or are these 90s or 144s? Does that change your thinking at all?
Well, so let's take this for example. This is based on a monthly, but I mean, obviously we can see it in the other the lower time frames. But I watched remember I pointed out that 360-degree count that's coming out.
Yes.
Um, so I watch for cycles to watch the cycles within that, but it's sort of hit or miss. The key thing is the beauty of a cycle is we know the boundaries. We have those trend lines and they can't be moved.
Right.
So I really wait to see the break of that. And when it breaks, then you can really focus and say, okay, do we have something here? That's why a lot of the times, with triangles, it's really real time that I can at least analyze and get in on it. Ahead of time, it's hard because we don't know where it's going to break or to which side. Once you have that extra information, right, then it's easier to make the trade. You know which direction. You already know structurally where it's consolidating, if it's above, below, prior to the square, after one. So once you have all of that, then the directionality is easier and it's easier to measure the sort of the potential move out of that.
But what
Depending
I'm
on
saying
where
is in your experience, when you see all of these triangles and you have a convergence of time counts, does it make you more on alert? Does it prepare you for bigger moves? Is there any kind of clues you get by seeing the combination of those things appear?
well, for me, what I've noticed is a triangle that's working, there's always timing in there. You can see it. It's either the
Mhm.
beginning, it's squared out, or it's on the way to get squared out.
Mhm.
You know what I mean? Like the triangle could be like a lot of triangles we saw today, they started after the square.
Yep.
It would make a lower high and then it'll go on to make a triangle, like the Dow, the triangle in the Dow.
Yep.
So, you have to put a couple of different pieces together. But the beauty of the triangle is you don't need a whole lot. If you just know the width of the triangle or the height of the triangle and you have two trend lines, you can at least get to the first target
Yeah, for sure.
once you break it. So I think the beautiful part is you don't need a lot, but having the cycles that expired, I think it'll give you a clue towards like how big of a move to expect.
Mhm.
That's kind of how I look at it. But I still measure it. Once it breaks, I'm still back on the square, waiting to see.
No, no,
Where.
that's absolutely right.
Yeah.
To me, it's like a confirmation that I see, right? I'm saying, okay, I got cycles coming up, markets are, winding up into that cycle,
Mhm.
energy's going to be released,
Yes.
right? I don't have a bias about which way or any, I try to stay open, like you talk about, open to the possibilities of, whatever could happen because anything
Mhm.
can happen. but I get sort of my senses are more heightened because I see those two things, coming together to create the the energy needed for a big move.
That makes sense. And also, if you take it from like an Elliott perspective, the second could give you a triangle, which would give you a very powerful third, and the fourth could give you a triangle that could lead to a powerful fifth. So we do get, if you just take the stats, we do get nice moves coming out of triangles, because even if you look at the five legs, it's there, right?
It is there. Yeah.
And at the end of a five, you can get a triangle, some kind of ABCD triangle or something, and then it'll fail or not, or it'll continue to expand on that. So I think triangles kind of hold the whole market together, actually, in the big picture. In
Yeah.
between the runs, something has to hold it together. It seems like, various kinds of triangles are what links up the chain of events. So I think from that perspective, it's good to monitor each one, because it helps you kind of see how the thing is unfolding.
Very good. And that's a wrap for us this week, everybody. As you can see, July is setting up to be a lot of activity, a lot of excitement. So rest up, be ready, and don't get lulled to sleep by these triangles, because chaos follows triangles. That's for sure. Have a great week. Great job, Barrie. Everybody have a great week, and we'll talk to you next week.
Thanks, Ben. Good job. And you guys, if you like our work, please remember to like and subscribe. And what else can we do? I guess you ring the bell and
Ring the
leave us.
bell.
Yep. And leave a comment. Yeah, we'll see you all next week. Thanks,
Take
Ben.
care. All right.
Bye. Ciao.
Bye.